Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, February the 8th. The year's 2022. Let's talk trading. Price part 4. These videos are for educational purposes only. Your results may differ from mine. Um, you know, I was in a trade this morning, and what I did was I FOMO'd. What had happened was I had gone short, price went against me, and I had added in a couple of times because I got short signals. Then I was up about I don't know, was it 3 pips, 2 pips on one of the trades, and I didn't exit. And then price ran against me. And then it did it a second time. Then it did it a third time. And I realized was the reason I didn't get out was because I'm thinking, well, it says price is going to drop. Well, eventually it did drop and I got out. I think I was in right around the average price, right around 50. And I think I got out somewhere around 40, 48 maybe, 47. But the point I'm making is that, I'm looking at price. I'm thinking price is going to do something. My triggers are telling me it's going to do something, but price isn't doing that. And so I stuck in that trade. That trade could have turned against me. Price could have rocketed up. And so that's just something you have to be aware of. What I call that is reading my own press releases. I kind of kid with Walmart sometimes about it because usually more often than not, I am correct. But the problem is sometimes I get stuck in trades for a real long time. And let me show you something. You see right here where you had this big candle, and then it came back and then it went back up. I was targeting this level right here. That's what I was targeting. And so actually, yeah, I remember price came down. I think it was right in here. No, it was, let's see, was it that last hour? Yeah, I think it might have been right around here somewhere. And I exited with the where I was targeting. But as you can see here, price did this. I think I got in somewhere around here. But, looking back at my trade and saying, okay, what can I learn from this? Did I do something wrong? Did I fail to do something right? Well, I noticed my emotion that I didn't want to exit the trade with a small profit and leave a bunch on the table. So that was one thing. But then I noticed something else that, and this goes back from a long time. I'm looking at the indicator too, and I'm taking these trades. Well, here's a clue. If the indicator, if you already see 3 bear candles and you're getting a signal, your signal was back here. This is a later signal, and usually 3 in a row, what happens? It goes against you. So not always, because like here you've got 1, 2, 3 reds in a row, and then it went for you. But a lot of times this is what will happen, because you see prices made some move, and here it ranged. It went up, down, up again, and then it decided to range in here. And so you range is something you can pretty much only see in hindsight, because right here this was an inside bar, and so then price broke to the upside of that inside bar, and then it didn't really break to the downside. Once again, it's ranged. And then if you draw a line at the top here, you can see that price wasn't closing above that 54 level. And that was one of the reasons why I was sticking in the trade, because I was believing, having faith that price wasn't going to close above there, even though I knew 50 was actually the wick zone. Right here, 50 was the previous day's high. See, 50.2. So I was just below it, thinking price is going to come back into the body of the candle. That's what I was believing at the time. Oh, and if you're wondering what's all this gray, what I did was I modified the candles M indicator. I don't know why it was called candles M, candles M. I think somebody made a modification so they just doubled up the name, and that was the one I modified. So what I did was I give you a wick color, and then I say show wick zone. It's either true or false. And now this is the current wick zone, not the previous wick zone. So just give you a heads up on it. So you can see here, um, it's it's easy to see, you know, the upper wick, the lower wick, and then the current candle. Versus if you turn it off, if you say show wick zone false, you just get this little piece, and it's really kind of hard to see, at least for me, what's price doing. I like having the I really like having the wick zone shown because of what I'm looking at when I'm trading, because I'm playing with going back and playing with the indicator too. And so here you can easily see price went into the wick zone, failed to stay in. You got a signal and you take your short. Whereas here, it actually exceeded the previous upper wick zone. You got your signal, you could have taken your short, but you see here, it gave you some trouble. But once again, look where it didn't close above. So when you're looking at price, these are the types of things that you have to start to consider. Now, once again, you want to keep your method simple. So what I do is, it's real simple. Did price, test or exceed the upper wick zone? If yes, then do I have a signal to short? Then take the short. Or on the low side, did price test that lower wick zone? And you can see here it barely tested it here, but back here it didn't. But it did scream through here. And so when you see this magenta, or sorry, aqua colored dot, then you could take your signal to the long side. Because see, it came back tested, got within maybe a pip of the dot, and then took off. Because that was one of the other things that I was showing you about, knowing price. What does price do? How does price react? And you can see here, 65% of the time it's greater than 1 pip. It'll close greater than 1 pip away from the MA. But 2 or more pips, only 41% of the time. So that's your edge. So when you're looking to take these trades, so right now, we're most likely going to look to go the opposite way. If we get a blue or a aqua colored dot, then again, looking at the time of day here, it's just after 1 o'clock New York time. There's not going to be much. So, if you were short and you see this get to maybe 2 or 3 or 4 or more, that's when you take some profit off the table, let price pull back, and then you can re-enter. And so that's one way of getting over the fear of FOMO, thinking, okay, price dropped down here. I think it's going to keep going, but it starts to move against me. I can jump out, take profit off the table, and I might get a chance to enter in again at even a better price than my original entry. Or I can get back in the trade and take more profit. And see, that's not really somebody might say, well, that's hairy hindsight, you got blah blah blah. No, this is how you trade in real time. So if you noticed here, we're at 1.6, 1.8. Actually, let me I can turn off that one indicator, the open range plot. and that's a new one will be releasing. So you can see right here, you are 3 pips away. You've got you've got 3 minutes left in the candle. So do you let the candle close? You look to the left, you see, okay, it's come down here before, it's moved up from this level. Now, will it break this level? If it does, it could keep going. So right now, you might look right here, might be a good place if price were to reverse to take your pips off the table. 4.1 away from the EMA, 5. Well, how many times? Only 14% of the time. So let's just see over the last 1,000 M5 bars. So we're counting a lot of bars. So as you can see, price is pulling back. You've got 2 minutes left in this, so we've got time. We can just watch what happens because we're talking about price and what price does. Sometimes it is like watching paint dry. So the question is, did you want to take your 4 pips, hoping to get more, or are you happy with 4 and maybe you can re-enter the trade? So now you've only got 2.9 if you got in right at the dot. And we still have a minute and a half left in the trade here, or left in this candle. Now, sometimes you might want to just let that candle close, or, if you're happy with the amount of money, take your pips off the table. But whatever you do, don't, have any rogo, any regret of getting out, because that'll just mess with your trading. Like I said, I caught myself doing a FOMO this morning, so it's like, okay, time to correct that. Because it's really easy to drive yourself crazy as a trader, because no matter what you do, part of the time you're going to wish you hadn't done it. The other half you're going to wish you had. The funny thing about the way our minds work, at least the way my mind works, is I remember the stuff that I missed out on more than the stuff that I got. So I remember leaving 5 or 10 pips on the table. I don't even remember taking the 5 or 10 pips. It's just like, oh yeah, I had a good trade, but those aren't the ones that stick with me. And it's just, part of human psychology. It's like that one story where the professor gets up in front of the class and he goes, 1 times 9 is 9, 2 times 9 is 17, 3 times 9 is 27, all the way up. And he basically, made that second one wrong on purpose. And everybody goes, Professor, you made a mistake, and blah, blah, blah. He goes, see, the reason I did that is I want to show you what happens in the real world. You can do 9 things right, but do 1 thing wrong, nobody's going to talk about the 9 things. They're going to talk about the 1 thing. Now, that's what you have to be careful of when you talk to yourself, that internal dialogue. Is that, you focus on, hey, 9 times I made money off of that trade, the 1 time I didn't. So focus on what is going to benefit you. That's part of the message here. So, fellow traders, I hope that little discussion about price may have helped you in some way, shape, or form. Let me know one way or another. If you have any questions, feel free to ask. And when you sit down at your trading platform, always keep this in mind. It's not what you trade, it's how you trade it. So go out there and drain the banks. And this is TheRumpledOne, over and out. Oh, while I got a couple seconds, thanks again to the people over on Reddit, but I would appreciate some more karma, because I think my karma's been stuck there.